So the topic is, you all know, is it not enough to earn six figures? So six figures is, your salary, how much are you earning? We'll start with that. How much is enough? What all do you need to do? And at the end of the session, how can you save money from your day-to-day spends, right? So yes, let us start. Okay, the first question I would like to ask all of you is, why are you all working today? And you can give me a response in the chat box, I suppose. Having a good life, Anthony has given response, having a good life plus essentials. Good. So yes, Anshu has given a very good answers, and Obik also to earn money and to pay bills. That is absolutely true. To live a good lifestyle. Perfect. Lifestyle and save for retirement. That's an interesting answer. Oh wow, I love writing, and why not? So you're following your passion. Ria also, to travel must be your passion. Great. So let me basically, put it down in simple words. One is money, maybe job satisfaction. There are people who are doing it to support the family. Experience के लिए कर रहे हैं लोग. Stable job to show for marriage. I have got this answer as well from a lot of people. Securing your own future, as somebody pointed out, that retirement is a reason, right? But the important part is, have you planned your goals, or are you just doing it for the sake of it? That is the most critical part everybody misses. If we are working, we are saving money or saving or earning to spend. But what about the future? One of the persons rightly pointed out that you are doing it even for saving or retirement planning, right? Now the question is, what? Maybe some of you already have planned your goals, some of you have not. So the next question right now is, what are your goals? Travel, nice. Buy a car. Buy a car or house, yes. Financial independence or financial freedom for secure future, right? Anything else anybody has thought of? What can be the types of goals? My goal is to buy my dream house and also financially be strong in my 50s. Absolutely. So let us break it down. Retire early, correct. That is something called as FIRE, financial independence, retire early. Most of you have pointed this out, and I also believe the most of the audience today is in their late 20s or early 30s. So this will be one of the most critical goals that you have. But some other goals as you go towards further in your life would include child education or marriage. A lot of people start planning for their kids' education way before they have even planned their kid, so that they have enough time. Again, from the child's marriage, people plan for house, car, other fixed assets, annual vacations, as somebody pointed out, travel, emergency fund, which is a very critical component of your financial planning, parental responsibilities. A lot of people want to support their parents. So now coming to the next point, what is FIRE? Remember, FIRE is not a trend, it's a mindset, right? FIRE does not mean that you have to retire early. It means you have the capability. You are financially independent and you have the capability to retire early, right? So if you plan from today for the next, say you want to be financially independent in 10 years, so you will have to plan accordingly. But that does not mean that after 10 years you will completely stop working. It means that you can continue working, you can continue doing what you like, but at your own free time, at your own free will. That is what actually FIRE is. A lot of people misunderstand it as that I have to retire, I will not work anymore. That's not what FIRE is. FIRE is a concept that came from USA. There are multiple types of FIRE, like fat FIRE, basic, common FIRE, lean FIRE. But in a nutshell, FIRE simply means that you have the money, you have enough wealth to be able to fulfill your monthly expenses or your annual vacations, etc., using the money from that, using the investment income by not touching the principal. Actually, FIRE means you will just take out the profits or the interest from your investments, and you will use that interest and your income to fund your lifestyle expenses, right? Which might even include buying a car, which might include traveling the world, which might include your life daily expenses for your family, etc. So the next question, very critical: how much should I invest and where? A lot of people ask me this question: what is this a good time to invest, or when is a good time to invest? My answer to them is now. Only your assets will change. If you are an aggressive investor, a bad market is the best time to invest in equities. If you are a very safe investor, a higher bond rate or a higher repo rate is when your FD rates will be the highest. Lock your money for a longer time then, so that when the rates fall, you still have a higher rate for yourself. Gold, if you are going to accumulate it, great. But if you are going to just buy from a trading perspective, whenever the price of gold falls, you invest then. Or if you see a war coming in, then in that case, your gold prices will shoot up. So there will be a situation. In a good market, you will invest in probably bonds. In a bad market, you will invest in equities. But yes, every time there is an opportunity to invest, it is better to invest than keep the money in your saving accounts, right? So can anybody tell me what is the 50-30-20 rule? So yes, this is so a lot of people have given a decent answer. Something about needs, wants, yes. So indirectly, 50% are your expenses, right? They can be your needs, they can be your wants. I think 30% will be your investment, and 20% will be your savings. They will help you accumulate. Plus, for your ad hoc expenses or miscellaneous expenses, or your savings will be taken off from that 20%. Now the question here is it the right rule? Is it an ideal rule to have 50-30-20? No. Just to give you a perspective, if you are earning 1 lakh rupees a month, your rent is say 30,000 rupees a month, plus you have other expenses of 20,000. You are spending 50,000. You can comfortably, invest the remaining 30%, and 20% can go into saving. But the flip side here is that suppose your salary increases 2 lakh. Will all your expenses increase by 2x? No. You might not immediately shift from a 30,000 house to a 60,000 rupee house. Maybe your expense annually might increase from 30 to 40,000, right? So your overall expense from 50 might become 75,000. You will still have 1.25 lakhs left, right? So in such case, 50-30-20 is considered an ideal rule, but it varies from person to person. Do you want to follow exactly this or not? So one very important thing about finance is nothing is eternal. Change is very important. Whenever your salary increases, or maybe initially when you are starting with a salary of 30,000 and 50,000 is your rent, you will not be able to invest 30,000 or 30%. So critical thing, while you are doing your budgeting, always keep into consideration that what are your compulsion or what are your fixed expenses, what are your miscellaneous expenses, or one which can be fluctuating one. Then decide how much can you invest maximum. Also, your savings will keep accumulating till the time you reach your emergency corpus, which is roughly 6 to 12 months of your monthly expense. Your emergency corpus always has to be between 6 and 12 months of your expenses. That is sufficient. Beyond that, there is no point putting the money into emergency funds because you lose money. Today, most of the big banks give you 2.75% per annum interest. Your inflation is at 6%. So emergency is for emergency. Try and keep it for emergency. Next, we are coming to the financial planning. So what does this image tell you? Okay, let's put a very interesting point. Planning for rainy days while enjoying life. All the essentials under one roof. Well put out, Ashvi. So yes, as everybody pointed out, this is planning for the rainy days or ensuring everything is covered so that you don't have to go outside this gambit of the umbrella. So here if you see, this is your education, this is your medical expense, this is your house which is covered, house and car. You are covering your family, you have a house of your own, you're going for vacation, this is marriage, this is your car that you want to buy, say a luxury car. So financial planning basically ensures that it tells you right away that what all do you need to do to achieve this, what are the parts where you need to secure yourself to ensure that there is no unforeseen circumstance impacting your life. Yesterday was a very tragic incident in the flight in Air India. 3 months back, something happened in Pahalgam, which was not good. But you know, if something happens to your family or something happens to the primary earning member of the family, how will the family survive? Right? For all those instances, or say you want to plan your education, higher education for your kids in say Harvard or a medical line, so you will need a significant chunk of money and you will have to start planning today. This is what financial planning tells you about. Just to give you an idea, this is how it's a gradual process. It does not mean that you will have a financial planning activity done today, right? So it starts with the pre-work. You have to understand what is your earning, what are your expenses, right? Then you have to do a goal setting. These are the critical goals. What is the amount that you need to do it to achieve them today? After doing that, you will have to identify that how will you go ahead with those goals, what is the inflation. You will have to analyze the current situation, what is your income, how is it expected to grow. Then you will go for a risk profiling, identify your risk appetite. There might be two people who have the same goal, but the risk appetite may be different. So of course, the asset allocation and the investment will be different. So after risk profiling, you will have to identify your asset allocation. How much has to go into equity, how much into fixed income, how much into gold. Next is implementing. On paper, doing an asset allocation is very easy. Actually being able to invest and running the balance of time, staying the course is very important. After that, regular monitoring and then rebalancing. So this is the complete process of financial planning in a nutshell. And you need to understand this is very critical. If someone wants to take a screenshot or something, you can take the screenshot. This is a very basic brief and everybody should follow this process. It helps secure you and your family's future, right from investing to your emergency funds to your insurance. Everything will come under this. So these are some of the critical products. I will not go into much detail. Just to give you a perspective, protection, you have life insurance, which has term plan, endowment, money back, etc. If you ask me, a term plan is sufficient. No other plans are needed. Then you have a mediclaim, which is your health insurance, which covers you. Life insurance covers you in case of demise or death. Health insurance covers you in case of any illness or your medical emergencies. Third is your household insurance. Household insurance means if you have a house of your own and something were to happen unforeseen, say a god, like an earthquake or something, or maybe like the flight crashed into a hostel. If it is not insured, then to rebuild it is a significant cost for you. So if you have an insurance about it, it more than suffices in some way, right? So what is a term plan? Priya has asked me, so I'll just give you a brief about term plan. Term plan basically means that in case of, if I am covered under my term plan and my nominee is my wife, if I pass away, my wife will get a decent enough chunk of money, basically the sum insured in the term plan, which will take care of my family. Normally, term plan, how much should be the coverage of a term plan? It should be roughly 20 times your annual income. So if you are earning say 12 lakh rupees, then your coverage should be roughly 2 to 2.4 crore rupees should be your coverage of your term plan. That is how it is calculated. So this will take care of your wife, kids, or maybe your husband, kids, etc. if you are an earning member of the family. If somebody is not an earning member of the family, term plan may not impact them much, but depending on your financial situation, you can choose to take or not take a term plan. I would recommend everybody taking a term. Health insurance is a strict compulsion. You must take a health insurance. Health insurance is something that will be useful for you in case of any mishap or unforeseen circumstance in your family, like an accident or a disease. You never know when you get ill. right? I will cover about some of the misconceptions in my later on slides. Now, investment planning, wealth creation, emergency fund creation. So there are certain products which are guaranteed return investments like an FD or RD. Non-guaranteed return investments will include stocks, mutual funds, PMS, AIF, etc. Gold is also a non-guaranteed return investment. Then you come to the debt planning. So how to optimize or use your credit cards or loans. If you have multiple loans running and you are still thinking that which loan should I close first, where should I give the most amount. So in very simple terms, the easiest way to identify is always clear the largest loan, or sorry, the loan with the highest rate of return first. So a lot of people I know only pay the minimum due on your credit cards. Never do that. Credit cards, the loan interest on a credit card is 3 to 3.5% per month, which is roughly 40% per annum. It is way too high. So never pay the minimum due, always pay the full amount due on your credit cards first. Even if you need to take a personal loan to clear your credit card dues, do that. Try and ensure a situation where you don't have to be in that kind of a condition. But in case of emergency, if you have to, do it. And a couple of important things is if you are investing your money in FDs or mutual funds, etc., or stocks, you will also get a loan which is cheaper than a personal loan against your investments. These are called loan against securities or loan against FD. On FD, generally the banks offer at 1 or 2% higher than your FD rate. So you will not earn interest. If your FD is at 7%, they will offer the loan to you at 8 or 9%, which is way cheaper than a personal loan. In case of emergency, don't take a personal loan. Instead, keep investing and use your investment as a tool for your loans, but only in case of emergency. If you are doing a proper financial planning, you might not need to take the loans, except for your home loans or car loans. And this is the debt reduction planning, how to optimize. If your loan are at a higher rate, and because you have taken a floating interest rate, the rate has reduced by 75 basis points, 0.75% in the last 6 months. So your loan should have gone down. If it has not, please contact your bank and tell them to reduce your rate of loan. Saving money via credit cards and debit cards. So what are your major expenses? What are your most critical expenses that you have today, apart from rent? Bills, groceries, petrol, traveling. I was waiting for the shopping part. Going out, food, party. Perfect. Pretty much most of these things have been covered. You have hotel, rent, flights, UPI. So a lot of people, even if you are going for Golgappas, right? People pay via UPI. Most of you are salaried, but a lot of people who are on the business side have to do tax payments as well, right? How to maximize ROI? In the last 1 month or so, I have stayed at Raffles. My bill was 77,500. I only paid 240 rupees from my pocket. I stayed at Novotel Hyderabad last month. Then my stay was free. My food, everything was covered in 354 rupees. It was all through proper usage of credit cards and debit cards. I don't know if most of you are aware, but a lot of debit cards also provide you points, like IDFC Wealth or private debit cards. They offer between 1 to 2.5% on your debit cards. A lot of credit cards provide you between 1 and 5% of your return. Right now, some of you might not be very regular users of credit cards, for which you can always start your journey with a lifetime free card. Right? Just a second. Yeah. Travel, food, groceries, medicines, bills. So you can earn money on each of these. How to optimize? Very simple. A lot of this is a loophole that is existing in Amazon Pay. Is that if you go ahead and buy Amazon Pay vouchers, load it into Amazon Pay, and then pay your utility bill from there, you will make points on that. Because a lot of credit cards have stopped giving points for directly paying utility bills. So indirectly, if you pay, I do a lot of payments for my house, all the utility bills. Even for example, for petrol, somebody said petrol, right? See, hotels, flights, shopping, all the cards give you points on that, right? How you optimize depends on your salary criteria. I will also name a few cards which you can have. If you want the links, I will give you those links as well. I will send them to Priya. She can forward it. But there are certain critical, for example, rent. Most of the people do not provide points on rent. Most of them will not provide. You can't use a Visa or Mastercard on UPI, right? Utilities के लिए you can't use a lot of cards. So the best part is if you have to pay an insurance bill. If it's a smaller insurance bill, you can just load your insurance Amazon Pay wallet, pay it using that. Same thing applies for your utility bill. If I have to pay, if I have to make a payment on petrol bill, what I do is I use personally HP Pay. It is near my office. I use that app. I have linked my FASTag to it. You can load ICICI, IDFC FASTags of your car or vehicle. You can add them from Amazon Pay. You can load your FASTags and then make the payment using the HP Pay app. There are some loopholes. One of the recent cards which I sent to some of my clients today is Escapia. They are offering it lifetime free card. It gives you between 2% and 4%, and it is not an advertisement. I like that card, so I am recommending it. If you have
API
a decent enough
also
salary,
gives, I think, 1000 shopping free, I think, on all domestic airports.
which one?
Scapia.
So the second part about Escapia is it does not give 1000, it gives 1000 for every instance.
Yeah,
So
every
for example, so this last 1 month I went to, I had a lot of travel. So 16th I traveled from Udaipur to, so on smaller airports it gives you 500 rupees. Larger airport it gives you 1000 rupees. So I was at the Udaipur airport. There is no lounge in Udaipur. So I used my the card for food. Up to 500 rupees you get points back. Bombay airport I had a lounge access on my other cards. So I used Escapia to shop. You can use it for food or shopping or lounge access, and some locations you can use it for spa also. And I think you need to spend 10,000 on the Rupee Visa card and 15,000 on the Rupee variant to be eligible in that month, which is I think
right.
nominal. इतना खर्चा हो जाता है. So it's a good card to have. Is it the best card? Maybe not, but depends. It's a lifetime free card, so it is one of the best in the lifetime free category. For UPI, there are certain other cards like Kiwi from Yes Bank, SDFC Infinity, which give you between 2 and 5% return on paying through their apps. So specifically, I cannot give you one card which is good for everybody. But yes, you can identify where. And yes, one more important thing, which is a misconception a lot of people have, is you don't need a bank account in that bank to get a credit card. Right? That rule only applies for only the highest cards. For example, Axis का Burgundy private card जो है, HDFC का Infinia, उसके लिए they will ask you for an account. Otherwise, no other card. I have a Diners Black from HDFC. I have the Axis Burgundy private. Diners Black के लिए मेरे पास HDFC में कोई account नहीं है. Right? So just ensure that you are not misled by any banker that if you take a ULIP policy, I will give you that card. No. It is basis your salary, you will get a card. Most of them, you will be able to get it free of cost. At the end of this, I will just give you my contact details. If you have any doubt, you can reach out to me as well.
As I was just saying that this repo rate only depends on the floating rate of interest, or is it also on FD, or basically there are also investment options where there is a floating rate of interest. You invest and there is the interest rate it's changed. So the repo.
So there are certain bonds which fluctuate as per RBI rate, but again, your RBI repo rate today is around 6%. Sorry, it's gone down to 5.5%.
Yeah.
Right. So your bonds of RBI, which were at 7.15%, will go down to 6.15%, 6.65% today. So your rate of bonds will always be lower than your rate of loan. So that is how the bank makes money. The whole concept of banking is that whenever you are doing an FD or putting your money into savings account, you are providing a loan to the bank. If the bank says it will give you 7% interest on FD, You are giving a loan to the bank and charging back 7%. Bank will then take that money and further give it to somebody else at 9%. So the 2% is the expense plus profit of the bank. Right? So when you take a RBI bond, there is not much of a costing except for operational cost there for RBI. So RBI is willing to offer you that money. Similarly, FDs India में अभी तक till now we don't have an FD which is linked to your rate. A couple of banks tried it earlier, which was called MIBOR plus 0.5%, etc. Similarly, loans were also offered at that rate, but it's not a very successful scenario because most of the people who have a traditional investing mindset, they invest in FDs. The whole point there is that they want to know what exact rate of return will they get. If you book an FD and I tell you whatever RBI rate is minus 0.5% is what you will earn, you will be like, "Nahi, that person is offering me 7%. I will go ahead and buy the 7% loan." So that is something, it's a psychological barrier. We are not evolved as an investment community yet at that level. But yes, in US or developed countries, Singapore, etc., you have those kind of products.